Today's podcast is brought to you courtesy of our friends at Tuttle Capital, who not only create defiant ETFs for the market, but help investors choose better, navigate smarter, and rest easier. Tuttle Capital, the antidote to Wall Street.
All right, joining me is Matt Tuttle, CEO and Chief Investment Officer of Tuttle Capital Management, who, if you're not familiar with Tuttle, since this is a crypto podcast, they are an ETF issuer, and they currently offer 5 ETFs directly under the Tuttle brand. Those have over $1 billion in assets. And then they have also partnered with RexShares on another 25 ETFs. These are called T-Rex ETFs. And these include a 2 times leverage strategy ETF, as in MicroStrategy. They also have a 2 times leverage Bitcoin ETF. There is an Ether one, along with a number of other leverage and inverse single stock products. And then not only that, Tuttle has also collaborated with several other asset managers on some other ETFs, including the Rareview 2 times Bull Cryptocurrency and Precious Metals ETF, ticker BEGS, BEGS, which stands for Bitcoin, Ethereum, Gold, and Silver. That's pretty good. And then lastly, I have to mention, Tuttle has a boatload of crypto-related ETF filings currently with the SEC, including a 2 times leveraged Trump meme coin ETF. And so the bottom line is, this is the way I think about it at least, Tuttle is not your grandfather's asset manager. I would actually say Tuttle is sort of like the anti-traditional asset manager. And so, Matt, it is great to reconnect here on the crypto side. I've been looking forward to this.
Oh, no, thank you for having me. Yeah, I'm your grandfather's age, but not your grandfather's money manager. We will have some more conservative offerings coming though, so stay tuned. You may need to change the intro a little bit down the road.
All right. Well, I'll tell you, there is a lot that I want to get to with you, but I thought let's just jump right in on these crypto ETF filings I mentioned. So correct me if I'm wrong. I show 10 filings from back in January. These are all 2 times leveraged ETFs, and they cover everything from that Trump meme coin I mentioned to XRP, Solana, Litecoin, Bonk. There are a bunch of these. And so first, let me ask, where do these currently stand with the SEC? And I'll offer the usual disclaimer. I know there's only so much you can say with certain filings, so I'll throw that out there. But what can you tell us about these?
Yeah, and actually, interestingly, they are all just about ready to go from an effectiveness standpoint. This is, as I'm sure you know, an entirely different SEC. I tell this story in 2021. We filed for an inverse Bitcoin futures ETF. Within 30 minutes, we were told withdraw. And, now we've got, 2x Trump coin, different universe, but they are, from an effectiveness standpoint, just about ready to go. And there's one we do plan on launching soon, and probably another one we're just trying to scoop up as much swap capacity as we can get.
And so with the other products, is it just a matter of looking at the environment and determining whether or not you think it makes sense to bring those to market? Like, how do you think about that? So clearly it sounds like there's a couple. Go ahead.
Yeah, it's really about getting the swap exposure. So 2x is different than 1x. 1x, yeah, I can buy Dogecoin, I can buy Solana, I can buy Trump coin. Yeah, I can buy all those things. 2x, I got to give somebody to write a swap on. And, there are certain things people are going to be willing to write swaps on, and certain things that they're not willing to write swaps on today. But why we filed for all 10 is I know at some point during my life, I'm going to find someone who's going to write me a lot of swap on every one of those names. I just don't know when that's going to be.
And we don't need to do a full CFA level deep dive here, but do you want to explain what a swap is to somebody who's unfamiliar with that?
Yeah, so that's how we get the 2x leverage. So a swap is we go out to an investment bank and say, I'm going to agree that if, let's say, Solana goes up, you are going to pay me 2 times the return on the upside. And if it goes down, we're going to pay you 2 times the return on the downside. The more
Okay.
volatile something is, and the more possibility that it could go to zero, the less swap counterparties feel like they want to participate in that for obvious reasons.
Right. And so that gets back to what you were saying. You have to obviously be able to obtain that swap exposure in order to
Right.
bring certain products to market. The other aspect with these ETF filings, they're all filed under the 1940 Act structure, which is different than the 33 Act grant or trust structure that's been used on the vast majority of spot crypto ETFs. Now, that is because of exactly what we were talking about. Your ETFs are leveraged and they're primarily holding swaps. But I bring this up, Matt, because these ETFs do have a different approval process, right? The exchanges don't need the SEC to approve a rule change to list and trade these. And we don't need to go down a rabbit hole here either, but do you mind just elaborating on that approval process a bit more for the 40 Act funds?
Yeah, and it's really the normal 75-day approval process where, you file your prospectus. Some point in 75 days, the SEC comes with questions. You answer the questions. They come back with more questions. You answer those. Hopefully, we're done and we are effective. Everyone would love to do the grantor trust. And IBIT can do that, obviously, because in a grantor trust, you can't make any changes to the portfolio. In a swap-based ETF, we're rebalancing every single day. I may have swap on, Solana. I may have swap on a US ETF. I may have swap on a European ETF. Just not doable in the grantor trust structure, unfortunately.
Okay, but the end takeaway for listeners is to stay tuned here as it pertains to those 10 filings that I mentioned. It sounds like there
Yeah.
are some things in the hopper here.
Oh,
Okay.
yeah.
On the topic of filings, I also saw that Tuttle recently filed for a crypto treasury income blast ETF, which my understanding is this would use options to go long companies in the Syntax Crypto Treasury Index. And then you're generating income using a put credit spread strategy. And you can feel free to comment on that if you'd like. But
Yeah. Yeah.
I'm just curious, how are you thinking about product development overall in the crypto space? Because you do have those other 10 filings that we just mentioned. There's obviously a ton of investor interest around crypto ETFs in general, but there's also a lot of competition from other issuers. And so, how are you thinking about product development here?
So I want to go places where there isn't competition because you're right. So you're not going to see us launch a spot Bitcoin ETF. That would just be stupid. I could just throw money in the oven instead and save myself the trouble. So we're going to look at areas where others aren't going. So 2x on spot is an area that, others, at least for now, aren't going. And we preemptively filed things that operationally I can't launch just so that, when I can, I'm first. The crypto treasury idea, the DATS with a put spread, that's a unique strategy where, because I'm doing puts and not calls, I can give you the same insane looking yields, but I also don't limit your upside. We're also playing around with the idea of doing our own DAT. And so, we'll see. I've had a lot of conversations about that. We'll see if I can get that off the ground. We're also going to be doing 2x on pretty much all of the popular DATs. And we've already got DJT, we've got GameStop, we've got MicroStrategy, as you mentioned, and we're going to be doing a lot more in that space. And then there's some other things we're going to be doing in partnership in crypto with a bunch of other groups. So not only do I foresee us having our own products with Rex, but there's a couple other groups that we're going to be in partnership as well. So I'm planning on being knee deep in crypto.
That's really interesting, particularly potentially doing your own DAT. I'm very intrigued by that. Let me ask you this on this topic of digital asset treasury companies. I think, as you're aware, there has been a lot of debate around these. You have sort of one camp that believes it's all just financial engineering that's going to end poorly for investors. And then, of course, there's another camp that thinks there's some real value creation going on here, very bullish crypto. It sounds like you're more in that latter camp. It sounds like you're more bullish long term.
So I'm in the middle here because I'm also a trader and an investor myself. So I'm almost looking at these things the same way I'd look at a closed-end fund. So if I look at a closed-end fund, I'm like, wow, I like that portfolio, but man, it's trading at a 50% premium. No, I'm going to go out and maybe buy the portfolio myself. It doesn't make sense for me to buy it at a 50% premium. If I see it trading at 90%, I'm going to back the truck up and buy that all day. So me personally, I'm not buying a DAT when it's up 300%, but if it's slingshots back down and I can get it for 95 cents on the dollar and it's a coin that I want exposure to, yeah, I'd rather buy an ETHZilla than an ETH if I can get it. It's some sort of a discount. So I look at it like that. I think there are, just like anything Wall Street does, there are too many. So, what I am working on, if I can get it off the ground, will be highly differentiated. And along that closed-end fund idea, it'll be a way to get exposure to an area that you currently cannot get exposure to right now. And I'm exploring the DAT because the rules around that are different than the ETF rules. And yeah, I think the ETF rules will catch up in my lifetime. I just don't know when, and I'm not keen to wait.
Matt, what I think about Tuttle's existing ETF lineup and some of the existing crypto related ETFs you're currently involved with through the partnership with RecShares. And let me rattle off a few of these. So there's a T-Rex 2 times long M-Star ETF, ticker MSTU. There's an inverse version of that, ticker MSTZ. Let's see, there's a T-Rex 2 times long Bitcoin Daily Target ETF, ticker BTCL. The T-Rex 2 times long Ether Daily Target ETF, ticker ETU. There are also inverse versions of both of those. How do you see these being used by investors? And actually, before you answer that, I've got to say, I feel like, at least from what I've seen, you take a lot of heat from the media and some of these industry pundits because they'll say, investors don't understand the risks involved with these products. They shouldn't have access to them. You'll see stuff like that. So perhaps comment on that, and then I'd love to have you tell us how you see these products being used.
Yeah, and you're right. And I look at it like these are tools. And in my mind, when you're an investor, more tools is better than less. And the investors don't understand what they're buying and can get hurt applies to almost everything in finance. Like, look at what happened with ARK in 2022. They were brought out as, oh, they're great, they're great, they're great. And, kaboom. Zero DTE options, on and on and on. There are so many things. Does that mean we should ban them and just say, hey, you can be in a 60-40 portfolio and that's it? No, these are tools. And, what we're going to try to do is educate people on how to use them the right way. And, I don't see obviously every trade. I see the trades in mass, but what I see shows me people using these the right way, where, I see a lot of counter trend trading where we'll have money flow into MSTU, which is the long version, when MicroStrategy's beaten down and money comes out of the short. Then MicroStrategy zooms up and maybe, it's now 2x, 3x versus its Bitcoin holdings. People are buying the short, they're selling the long. And I look at that and, from an issuer standpoint, that sucks. I would rather have people just buy everything. But the trader in me is looking at it saying, good job. I mean, that's exactly what I would be doing. I think the vast majority are using these the right way. Is someone every once in a while going to use it the wrong way? I mean, they are, but they're going to do that with every product in finance. We do a lot of education, podcast, newsletter, webinar. I try to do as much as I can to help in that regard.
Well, it's interesting because when I think about Tuttle's approach to ETF product development overall, I actually see some real parallels to crypto, believe it or not, because I always say crypto is removing a lot of the traditional barriers that investors face in accessing investments, right? It's really letting investors decide what they want to buy and when they want to buy it. If someone wants to go and buy a meme coin, great, do it, right? If they want to lever up on Bitcoin or Ether, that's their choice. And so I actually see some parallels between what you're doing and just crypto overall. The other thing that I would say is I don't think some people realize, and you were touching on this, just, you're a trader. My understanding is that you don't necessarily think a traditional 60/40 portfolio is the best way to go. And I think some people miss that in Tuttle's approach because they think you're just throwing the stuff out there, but you actually are a trader at heart, correct?
I'm a trader at heart. I manage money in a way I call the heat formula. We write a daily newsletter. It's free. You can subscribe on our website, tuttlecap.com. I'm writing a book about it, hopefully be out next year. Simply, it stands for hedges, edges, asymmetry, and themes. And what you mentioned about 60/40, I believe you should always be hedged. And I think bonds are not a hedge. And if you disagree with me, look at 2022 and look at Liberation Day. Stocks and bonds went down at the same time. For something to be a hedge, it's got to work all the time. And yeah, and what you mentioned about crypto, I'd add one thing. And one of the reasons we do BEGs, which is crypto and precious metals, and talking about tools, is as US based investors, everything we do, we're forced to do dollar based. And, I love having things like crypto and gold as investment options. If we want to say, you know what? I don't want to have all my portfolio dollar based. I want to have some Bitcoin. I want to have some Ether. I want to have some gold. I want to have some silver. And we're going to have some filings around that coming out, hopefully within the next couple of weeks as well.
How do you think about crypto, say, beyond Bitcoin and Ether? And it's funny, and I don't know if you saw Rick Edelman. His approach is that aggressive investors should allocate like 40% of their portfolio. I think he was primarily talking about Bitcoin. Maybe Ether was in there as well. But clearly, some people see some of the other crypto assets out there as just pure speculation. So, does it just depend on the crypto asset?
For me, putting on my trader hat now, my personal portfolio, I need to understand the use case, beyond Bitcoin. What's the use case? So, like, am I going to ever personally buy fart coin? No. Could you make money doing it if you're sitting there looking at the chart? I mean, I guess you could. And if you want to do that, I'm not going to say you shouldn't. But for me, there needs to be some sort of use case there. But the cool thing is that's a moving target. I mean, we're advancing so fast that, I mean, you've got to keep your head on a swivel, because I mean, maybe something where you're like, I don't get it today. Tomorrow you're like, I need to own this in my portfolio.
By the way, I'm going to go out on a limb and say we can't completely rule out a 2 times fart coin ETF from Tuttle.
Well, I mean, yeah, we're supply and demand.
That's right.
I am a provider of tools. If I can get swap on fart coin, let's go.
One of those tools that you had just mentioned, the Rareview 2 times bull cryptocurrency and precious metals ETF, ticker BEGS, that launched back in February. Can you talk a little bit more about this? I thought this was interesting because it essentially targets 75% exposure to Bitcoin, 25% to ETH, and then 75% exposure to gold and 25% to silver. So that's how you get the 2x, a 200% exposure. Just talk a little bit more about that. As I understand it, there's also not a daily reset here, correct?
Right. There's not a daily reset. So what we do is, the Bitcoin and the gold rebalance within bands. So if it gets outside of 70 to 80%, then we're going to go back to 75. It's 20 to 30 on the silver and the ETH. So that makes it a lot easier to just buy and hold versus a daily reset, which is great buy and hold if the underlying goes straight up. but not so great if the underlying is choppy or going down. So I like this structure for that. I think if you are a buy and hold investor, you need to have exposure to those four things. And, size according to your own taste. I wouldn't put 40% in, but certainly a big part of my portfolio is in crypto and precious metals, and haven't been unhappy about that. And the whole idea of having it be overall 2x is the old kind of portable alpha idea. If I want 10% exposure, put 5% in VEGs, take 5% and go buy T-bills, or 5% and go buy whatever. To me, that's better than, 10% in the 1x. Then you don't have 5% to do something else with.
Yeah, I think it just gets back into your point earlier about having some hedges in a portfolio overall. Look, just a few minutes left here. I have one more question for you, which I think I now ask of all of my Crypto Prime guests who are involved on the ETF side, which I've had a number of those, and it has to do with tokenization. And I'm curious whether or not, as an ETF issuer, you see tokenization replacing ETFs at some point. And I'm sure you saw earlier this week, NASDAQ, they filed to offer tokenized securities and ETFs. So this isn't some sort of pie in the sky dream, right? Things are progressing here. And so how do you see that playing out?
So I look at the entire infrastructure ecosystem, me placing trades, creates, redeems, people buying my ETF, people from Europe saying, hey, can we buy your ETF? No, you can't. Yet the market being open from 9:30 to 4 Eastern Standard Time. All of this stuff seems like it's for another era. And, given the technology we have right now, it doesn't really make sense. So I do think tokenization is going to be a game changer. I'm not going to predict whether tokenization replaces. I would not be surprised if it does. I think as ETF issuers, we've got to be very, very carefully watching this. There's going to be a play here. I don't know what it is, but I'm definitely keeping my eyes open, because we've got to modernize this at some point. There's just so much stuff in the infrastructure and ecosystem that, given today's technology, it's like, yeah, it doesn't make sense.
Well, and people have to remember, I mean, we used to hand deliver paper stock certificates back
Yeah.
and forth and those sorts of things. So you have to assume processes and technology are always going to progress. And I think I agree with you. I don't see it replacing ETFs overnight or in one
No.
foul swoop. You probably have tokenization run parallel. You'll see more asset classes come online. And ultimately, I think we will end up in a place where all securities are tokenized, but it's going to be a process
Right.
to get there. But Matt, such a fun conversation. Congratulations on everything you have cooking, especially on the crypto side. I will be watching. I'll be watching to see what you have coming out. But thank you very much for joining me.
No, thanks for having me.
That was Matt Tuttle, CEO and Chief Investment Officer of Tuttle Capital Management. Hope you enjoyed this episode of Crypto Prime. I want to thank our sponsor, Tuttle Capital. If you would like to learn more about Tuttle Capital's ETF lineup, you can visit TuttleCap.com. For exclusive daily market insights and the playbook that Wall Street doesn't want you to see, subscribe to Tuttle's free newsletter at theheatformula.beehiiv.com/subscribe. That's Beehive, BEEHIIV.com/subscribe. See you again next week.
Crypto Prime is hosted by Nate Geraci, president of OTR Media LLC. Nate is also president of investment advisory firm Nova Diaz Wealth Management. While OTR Media and Nova Diaz are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by Nova Diaz. Some guests appearing on this program may also be financial sponsors of Crypto Prime. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the possible loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit CryptoPrimePodcast.com for more information.